Okay, thanks for joining us, everybody. Good evening. Welcome to this presentation on our newest edition, Sweetwater RV Park, in our Suncrest investment fund. We know that finding good deals with solid returns is challenging in today's market, and we're pleased to be able to present one of those rare finds. All right, our confidentiality and disclaimer: the contents of this presentation are for informational purposes only. We encourage you to consult your tax advisor, accountant, and legal counsel to determine if this type of investment is right for you. We will share this presentation and Zoom recording out once we're finished, and we ask that you reach out to us if you want to share it with anyone else. We just like to make connections with new potential investors and partners. And then if you have questions during the presentation, please type them in the Q&A section. We'll get to those, and then we'll also have additional time at the end for you to ask any other questions. And then we will type up the questions and answers and send that out with the email to the recording link. So today we'll be running through the asset, who we are, if you haven't seen us before, our business plan, investment strategy, and just more information about the benefits of an open-ended fund. Okay, about us. So our mission is to deliver generational returns by fostering safe and attractive properties where residents and business owners are proud to live and work. And we believe that the Sweetwater opportunity is going to fall right into our sweet spot with everything that we're doing right now. So most of you on the Zoom are familiar with our team. We're more than happy to connect with you offline for a deeper discussion of who we are. If you're new to the presentation and offerings, myself and Brett co-founded Suncrest back in early 2021. Along with our key partner, Matt Hall, we have nearly 50 years combined experience in real estate investing. And many of you recall our dynamic duo, Doug and Kristen Hensley. They're a key in our core leadership team. They assist with project management, value add infill to our properties. And then our newest member for this specific deal is Wes Simmons. He'll be the star here in a little bit. He's owner of Rendezvous Campground and Total Camper, which is an RV property management system, who will lead the development of the project. Wes is a former NASA engineer and extensive experience in product development, automation, and project management. He's successfully applied that skill set to the hospitality industry, where he has accumulated thousands of users on his Total Camper app and has consulted with over 100 campgrounds to manage, develop, and optimize new sites, site upgrades, and amenity enhancements. We're really excited to be working with Wes. And Allie Larson, she'll be juggling the questions for us during this. She's our investor relation coordinator, executive assistant, marketing, social media manager. Wears lots of hats, as does Trip Cooper, our dynamic financial analyst, who continually works to improve our already strong underwriting and financial modeling systems. Matt, are you good?
Yeah, I think I am. Can everyone hear me okay?
It looks like it, yeah.
Okay, great. So we have the slide up with the
properties.
The map. Okay. So I'm going to continue to talk a little bit about Suncrest in general. We wanted to kind of provide you with this overview of the properties that we and our investors are currently invested in. We currently manage 21 mobile home communities, 1 retail center, and an RV park. And as this map indicates, the majority of our investments are in the Midwest of the United States, mainly focused around the Springfield, Missouri area, as well as Des Moines, Iowa. As a sneak preview, we're also talking about the investment fund today. These properties are highlighted in orange or green font colors. So currently in the fund, we have Bedrock Mobile Home Community in Ulysses, Kansas, Crossroads RVs and Camping in Fort Scott, Kansas, And the fund is also partially invested in our Missouri portfolio number 2, which many of you on the call may be invested in. And that's a suite of mobile home communities centered around Springfield, Missouri, as well as Lebanon, Missouri. To move to the next slide, Ryan. Mm-hmm. Okay. I think that this is something. I think this is another thing about Suncrest that allows us to add value and effectively manage all of those properties I just showed you on the slide before. And what it is Suncrest is vertically integrated. One, we have in-house property management, and we don't outsource it. We're strategically layered with regional management team and a network of local property level managers on the ground that report up to us. Also, we transport our own homes and have a dealer entity as well. Many of our mobile home communities, the investment strategy for those business plans are to add value to the parks through infilling vacant lots. With every home we bring into a park, we sell, we collect another lot rent, we're able to add value to that park and that portfolio. So to facilitate this, we have our own toter company. It allows us to easily move homes in and out of our parks without having to necessarily rely on third parties for the service. And then the other way in which we're vertically integrated is we have our own off-market deal sourcing. Obviously trying to source deals that we think are good investments they're not always easy to come by. So we have a team of US-based cold callers that are scouring different MSAs that we are interested in order to find good deals. So everything from sourcing goods everything from sourcing good deals that we want to invest in, to effectively managing the daily operations to increase revenue and decrease costs while providing a nice living environment for our tenants, to having the ability to transport homes to our parks to add value. It's all under one roof. Next slide, please. So this slide details the track record for some of our non-fund properties and portfolios. Just want to talk a little bit about the Suncrest recent track record. In Iowa, we have 299 pads. We've been able to add value to our portfolio there by building back utilities such as water. We've rehabbed and sold homes and infilled 10 homes, and we've been able to increase the NOI by about 20%. We've been able to increase the value of our Missouri 1 portfolio by about $1.2 million, and that's through installing modest rent increases and building back utilities at the parks. We expect the value of this portfolio to rise as well as we continue to infill it with new homes. And we just purchased our MO2 portfolio about 6 months ago. We've been fixing some infrastructure issues to cut down on some costs that we've been having and started submeter some of our properties. And this has afforded us a 6% cap on path, about 4 months earlier than we expected. Move to the next slide. Okay, what I want to do here is switch gears to the fund properties. So I've talked about these a little bit before. We have the Bedrock Mobile Home Community in Ulysses, Kansas, the Crossroads RVs and Cabins in Fort Scott, Kansas, and the Missouri 2 portfolio, which I talked about a little bit earlier. We're still really bullish on Bedrock. There's a strong demand for affordable housing in the Ulysses area, especially with the local meatpacking industry in that part of Kansas. We've gone in and started cleaning up the park, enforcing park rules that the mom and pop owner had let slide certainly over the years. And we have an awesome park manager there that is really turning that park around for us. We have successfully transferred that park from city water from well water to city water. And just this past week, we finished up submetering all of the homes, and we intend to start infilling this park in the upcoming quarters. Crossroads RVs and cabins, I'll say it's been a little bit more of a struggle for us. We love its location and its potential. The business there is seasonal. We bought this property towards the end of last year, which is the slow season for the park. So we expected and projected lower revenues during this part of the year, but expect them to come back in the upcoming seasons. At this park, we've also struggled with some of the water and sewer infrastructures, but our contractors are currently, on site fixing those. And we've been using this winter season to put in some new amenities into this park. There's going to be a brand new laundry room. We're rehabbing a dilapidated pool, and we're putting in brand new bathrooms and showers. All this should be in place and done in the next month or so as we're ready to ramp up for the busier season. I should also mention that we did have some unexpected cabin stays in the cabins there, which was good. It really counteracted some of the slow RV traffic that we've had this winter. And then I'd say, like I already kind of touched on Missouri portfolio too. So Ryan, why don't you, or Brett, why don't you move to the next slide, please?
All right, I want to talk through the RV advantages a bit. We discussed these in detail in our initial fund presentation last year. I won't go into a lot of details on these specific 5, but there are a lot of reasons to love the RV industry. It has an economic impact of 140 billion to the U.S. economy. Interest and demand continues to grow for RV. Notably, between 2001 and 2021, ownership in RVs rose about 62%. And a recent KOA survey in December showed that there's a notable shift pre and post COVID, with 86% of campers saying they like to camp to escape the stress of everyday life, which was an 11% increase from pre-pandemic responses. Increasing inflation factors and high interest rates help drive more and more people out of the traditional housing market as well, for some of these long-term type opportunities and into our niche markets of mobile home communities and RV parks.
Thanks, Ryan. And transitioning over to Wes, star of the show here. Yeah, by the way,
hey,
it's on
everybody. I'm
vacation at
Wes
a gorgeous RV park in Florida, right?
Well, I'm in Key West at Mallory Square right now, so it's a bit chaotic. I apologize for the noise in the background. If you guys have any trouble hearing me, just let me know. But I'll talk through this. This was on the schedule before the webinar, but I wanted to make sure that I was making myself available to be a part of this and support Ryan and all of you guys. I'll talk through Sweetwater. This is kind of my baby. The Sweetwater property, we found it about a year ago. When I see properties come across my desk every day, and Sweetwater jumped out at me because I think there's a niche there that is not being met, and a demand there that's not being met, and the location is just fantastic to do something special. So started looking into it, put a partner together to buy the property. And then I met up with Suncrest here to try to finish it off and put things in motion. Sweetwater is a sleepy little town, or has been a sleepy little town in the past, right between Knoxville and Chattanooga on I-75 in Tennessee, middle central Tennessee. It is located about 20 minutes from the Great Smoky Mountain National Park, Pisgah National Forest, Cherokee National Forest. Lots of little things there, Watts Bar Lake, Watts Bar Dam, and there's huge fishing tournaments and things like that. So it seems to be a tourist destination without being a tourist destination. But we think that's changing. Sweetwater government's really kind of stepped up their game, put things in motion to grow the city, and they're doing a lot of good things there. And they like us. They like our plan and our project. And I think it's going to be a good working relationship there. All right, go ahead and go to that next slide. Yeah. Yeah, so I mentioned we already own the land there, 22 acres right on the side of I-75. It's a cornfield right now, and that's all it's ever been. We are excited to make something happen there. We are going to be an RV park. It's RVs only, no mobile home parks. It is a campground, so we will allow primitive camping and things like that because we will have the facilities to support that. But we will be able to call ourselves an RV park only. The KOA that has been servicing the area, it's kind of run down a little bit over the past few years. It used to be a very popular destination. It was collect all of the travelers and such for the different tourist attractions in the area. They've got about 68 sites. It sold over the new year for just over $4 million. So we feel like we're in a prime location there where money is good for RV parks, and we think that's proof in the pudding. This is going to be a resort style park, like I mentioned. It's going to be right outside the Great Smoky Mountain National Park. Tourist areas there. We're on the other side of the Great Smoky Mountain National Park from Gatlinburg and Pigeon Forge in those areas. We're more on the quiet side, not nearly as commercialized, and a lot of people like that, especially RVers. They like to come in and kind of rest and relax and be able to have the same sort of vacations that other folks do, but they want to come back home to a quiet place, not something on the strip there in Pigeon Forge where it takes you 3 hours to drive from one end of town to the other one of town. And I think we're going to be able to provide. So this park is going to attract tourists like that, which is going to be our overnighters and our weekenders and weekly folks. It's also going to attract some long-term folks with something that we're very interested in there, and that's Red Stag Fulfillment. It's just moved in and just opened their first building there in Sweetwater. Sweetwater is a town of about 6,000 people, and Red Stag is going to hire 13,000 folks as they get up and running. And we're already seeing some of those folks trying to move in, new jobs, no place to live yet, and that's what we're seeing move into that area. All right, go ahead. All right, so we're building the park in 2 phases. Phase 1 is going to have 66 sites. I'm sorry, phase 1 is going to have 85 sites. Phase 2 is going to add an additional 66 sites for a total of 151. The drawing there is representative of phase 1. So if you can see, the pictures actually turn upside down. North is at the bottom, south is at the top. That's I-75 there on the upper left side of the picture. So we are adjacent to I-75, and you access us through Murray's Chapel Road, which comes in right at the interstate exit there. So it's very easy to get in and out. They'll be able to accommodate big rigs and all sorts of things like that. All right, this slide represents our construction budget. This is rounded off just for numbers to give a good visualization of where the money's going. Of course, we purchased the property there for about $525,000. We got to run utilities to the property, and we are in the city limits of Sweetwater. And so we will have to have city utilities, city water, city sewer, which is force main sewer. Force main sewer is not run down our road, so that's why that number right there is a little bit more expensive than normal. We do have to pay for force main sewer to be run through the property. And there is sometimes see. So we got most of the project is dirt and infrastructure. We'll build the roads, we'll build the pads, things like that. And then we got to pave and concrete. So that's what those lots are. There'll be 2 facilities in the first phase of this park. You're going to have a guard shack, which is a check-in office. That's where the gate is. Small. It's about a little less than 100 square feet. It's a very small little building there, just right on the entryway. And then we have a bathhouse. Bathhouse will accommodate 4 showers and 4 stalls on both the men's side and women's side at the same time. The laundry facility is also built into the bathhouse. So it's a good sized building. It's a little over a couple of thousand square feet. And both of those are going to be built in a log cabin sort of theming. And that's what we're going to go with the park. So we have a neighbor there on Murray's Chapel Road. That is a log cabin builder. We've already got everything approved to work with them there. So we're going to be able to build the park with a farm theme. We call the park Rendezvous Campgrounds at Sweetwater Farms. And the facilities will have that log cabin look. So it'll have an overall country, very country themed, appropriate for the Smoky Mountains and the foothills and such of the Smoky Mountains. So, should be pretty attractive. We'll have to stock the laundry room with laundry machines, of course. We're going to put very high-end Wi-Fi in. Okay, just lost my slide. There we go. We can put high-end Wi-Fi in. We'll have propane fill and vending machines. Total construction budget there is $1.5 million. All right, can we go to the next slide? All right, and Total Camper is our management company. We'll use Total Camper to manage it as my company. It's something that I've been developing for a long time. I work with hundreds of campgrounds all over the country to do design and construction services. So we've got our own crew to do the engineering work and the layout and even construction. So the dirt work and infrastructure and all that good stuff. Those are crews that I work with on a regular basis. We offer guest services, so we do all the reservations, we do all the bookings, anything that has to do with a guest in the park, we take care of that, and we do it using a lot of technology and automation and things like that, so that the owners of the park always have a up-to-date view of what's going on, and it's all in real time through the app, and so you always know exactly what's going on there. And we offer operations management. So we have our cloud-based operational software. Mobile app is launching in the next few weeks. So we've got a user side, we've got a management side, and so in that app, you should be able to access it anywhere with internet access. We have integrated accounting there, so that all transactions automatically transfer over to a very QuickBooks-esque type of accounting software. And then through those systems, we also were able to kind of put our hands on the park remotely with security systems, live look at cameras, and all sorts of things that you can think of to add to it, gate operation and those types of things. So even though a lot of the management is done remotely and through a very tech-heavy operation, it gives us, you know, we were able to put our fingers on it through that technology and through camp hosts that we put in site and things like that. So we're able to save a lot of cost in operation by doing things that way.
Great. Thanks a lot, Wes. Just a quick reminder to the group that you can post your questions in the Q&A section. If you do that, just post it there. It makes it really easy for us to track whether we've answered them or not. And it also makes it easy for Allie to take notes on that and share those out tomorrow. So please ask questions if you've got any. So we're going to shift gears a little bit. We wanted to make sure we got to Sweetwater as fast as possible. So we gave some essential information up front, got to Sweetwater so you could kind of hear about the new asset. But now I want to kind of finish up on Sweetwater, but talk a little bit more about the fund of mechanics, because by investing in this, you're not just investing in Sweetwater, you're investing in our entire fund, which already has other assets. We'll continue to buy more assets. So from a business plan perspective on Sweetwater, we are closing on it in just a couple of weeks. And then immediately Wes is going to go to work doing the development. He's already got the contractors set up. Just need to order supplies and get going. We expect to be ready to go well before Memorial Day. So May 26th is Memorial Day weekend. So that's where we have for our first lease up. Wes already has a wait list that we mentioned before, which is bigger than 50% lease up, but we're pushing for 50% at least within the summer. And then we'll continue to develop additional amenities like Wes mentioned. And then our exit strategy from a Suncrest perspective is to be bought out. So we are structuring in a way that Suncrest Investment Partners, which is the fund, will be bought out at a 20% IRR. So that can happen in 6 months, it can happen in 12 months, it can happen in 18 months. Sort of essentially when Rendezvous is at a point where they can buy us out, we'll get bought out at that pre-agreed purchase price. Which is great because that'll allow us to reinvest the future return into other projects. So where is the money going? Whenever we have real estate projects, we like to show the budget, and this is a little bit confusing because this has some existing properties in it as well as future properties in it, because obviously as a fund it's dynamic and it's flowing. So on the left, just to show our current equity at this point is $884,000. So this is the amount that's been raised to date from investors that have done our Crossroads and our Bedrock as well as MO2 investments. We intentionally have kept this low for a number of reasons, but mostly our big goal with the fund is to be lean. So we only want to raise capital as it's needed, either if we have a new acquisition or if we have planned capital improvements that are targeted for that quarter. What's really cool about the fund is typically, for example, with our Missouri 2 project, it's a normal syndication. We raised 1.6 million just for capital improvements. So our total raise was over 8 million, 1.6 of that was for capital improvements. We had to raise all of that day one, but we don't need all of it day one. In fact, almost half of it we won't even use until the second year. And so that's not very efficient because you're paying interest or preferred returns on equity you don't actually need, which is, again, one of the things we love about the fund structure. We can raise as we need. So right now we're doing an additional, I just realized I've got this box on the wrong row here. So we're doing an extra $500,000 this quarter. And what that's being used for is specifically to purchase more mobile homes at the Bedrock mobile home community, and then $250,000 in Sweetwater. So this investment we're talking about today is $250,000 investment that the fund will make, and then again will be bought out at 20% internal rate of return within that 18-month timeline that we discussed before. So there's a number of reasons we like Sweetwater. Obviously, Wes talked a lot about the demand there, the plan. But what we love from a risk perspective is that the land is already paid for outright. Wes and his partner Regina bought it with cash. And so they actually have a loan secured that will cover the entire budget. They can actually do 100% of the development with the loan that they've received. But they need some working capital up front to be able to do the actual work, because the way development projects work is you pay for it out of pocket and then the loan kicks in and reimburses you. So that's where this 250 is coming from. It'll also be just general working capital reserves. So really a lot of good things about that. And then once we're paid back in the next 6 to 18 months, we'll be able to use that for other planned capital projects for our other investments and assets. So investment strategy, this is for the fund itself. So again, Matt and Ryan have already kind of talked about this. I'll breeze through this a bit, but we're initially focused on mobile home parks and RV parks. That's strictly all we're looking at right now. We're also primarily focused in the Midwest. And then everything we've bought so far has been off market. Matt talked about our off market team, or our cold calling team. That's how we've sourced all of the deals so far, is by off market and cold calling. This is our target fund returns. So we've got 20% investor IRR, and then an average hold of 10 years. The reason we say average hold is that's because the underlying properties may be different timelines. So the reality is we actually want to hold all these properties indefinitely, but there may be timelines where we want to sell within 18 months, like Sweetwater, or we want to sell after 5 to 10 years. But the general hold for each property is about 10 years. However, the fund isn't set up as a cash out fund. I'll discuss this in a couple of slides a little bit more, but it's set up more like a mutual fund in the sense that investors can come in and out rather than being one major cash out event. Again, I'll talk about that again in a little bit. There's an 8% preferred return. This means before any other cash flow shared, investors receive 8% cash on cash returns. And then above that, 65% of the excess returns are sent to investors. So if we have a 10% return, for example, then the first 8% of that would go to investors. And then after that, the next, I can't do math on the fly, I guess here, but 1.3%, I believe, would go to investors as well. So it ends up being healthy on that. And then the excess would come to general partners for the management. We distribute monthly, which I think a lot of our investors enjoy seeing monthly returns versus quarterly or annually. So that's something we do. And the first distributions happen 6 months after your investment. And we say it that way because everybody invests at different times. So it's clocked from 6 months after you start your investment, you will receive distributions monthly. So why an open-ended fund? This is sort of a slide Again, I won't go through every single bullet here because we've covered this in the past and I want to respect people's times, but this is sort of to compare to a normal syndication as well as what's referred to as a blind fund. A blind fund is where someone might raise $10 million and they have 2 years to buy assets with it. So it's $10 million raise, and then over 2 years, they can go buy mobile home parks or retail or whatever it is that they may not actually know what they're buying up front. And so that's why it's called the blind fund. And so they have that 2-year horizon, and then maybe it's held for 10 years, they sell out, there's this big payout, right? The difference with an open-ended fund is we only raise as we need the capital. So we're able to be more lean. We raise when we have either a new asset or capital expenses that we've already projected and planned for. There's just a ton of benefits to doing it that way. One of them is, again, we're able to be lean. But then just in general with funds, you're able to get more diversification. Day one, you already can have asset in ownership in 3, almost 4 assets with Sweetwater. Day one, you'll have economies of scale. There's a bunch of benefits and synergies we get from managing these properties all under one umbrella. And in general, these are more liquid. So we have a 2-year lockup, but then after 2 years, you can redeem your shares. And that's something we can explain offline if you're interested in learning more about that. And it's similar to, like I said before, mutual fund, where we value the shares with a net asset value valuation, so that if you're buying day one, you may pay $1 per share. Someone down the road is going to pay a little bit more, and that's how we make sure that we're not diluting investors that have been in the fund from the beginning. Okay, finally, what are the next steps? So of course, we're in the webinar right now. Our funding deadline for this raise is March 27th. Coming kind of quick, and it's because we are closing on Sweetwater March 31st. Typical steps to be able to invest: you'll obviously watch the webinar, and then you want to create an investor portal. Looking at our attendees, I think most of you have invested with us in the past, so you should all have investor portals. But if not, just go to suncrestcap.com, click on invest, and you can see how to set up a portal, and you can make a reservation on there. This is a 506c offering, which means that we need to verify your accreditation. Process is super easy. You can either do it through the investor portal. There's a flow that does it, or if you email us, we can send an e-sign request to your CPA, tax professional, financial advisor, or lawyer, and that takes them 2 or 3 minutes. So it's super easy to do it either way. And of course, feel free to reach out to us directly with any questions on that. And then we'll have e-signed documents for the operating agreement, private placement memorandum, and then you'll fund. So all of that can happen the same day. It actually goes really fast. So as long as you've got the funds lined up and you've got the interest, let us know. We can help you take the next steps on that. That's our last slide. We will share this entire deck, which does have some appendix slides that has more information on Bedrock and Crossroads. And then I just want to sit on this slide for a minute so you can see our email addresses. In general, I'm the best person to contact with any kind of questions about the investment itself or how to invest. Brett at suncrestcap.com. As Ryan mentioned before, he handles all of our operations. So if you have questions about properties, you can email him. Or if you don't know who to email, just email both of us and we'll get back to you fast. So with that, I will pause and see if there are any other questions from the group. I don't see anything in chat just yet. Okay, since we don't have any questions, I'm actually going to take the opportunity to go to an appendix slide that we get asked a lot about. One question we frequently get asked is, what do the returns look like? And the slide I'm sharing here is something you will typically see in a syndication, and this is how we do all of our syndications. We always show up kind of a pro forma, where if you invest $100,000, this is what you can expect to see. What is really honestly kind of confusing about a fund structure, though, is this is $100,000 invested into one property. So if you were to invest $100,000 into Bedrock, this is what we would expect. Because Bedrock is just one of many properties, the actual returns will be a little bit different because it's diversified. So when we do the underwriting on properties and we look at what comes to the fund, our first bias is against cash flow. We want to get really good cash flow. We care obviously about long-term returns, but for this, cash flow is king for us. The other thing that we're focused on is tax strategies. So meaning in general, we want to do long-term holds. And when we do sell, buy something quickly so that it offsets any capital gain that we get. So that's another thing we're focused on. So with that said, looking at this 10-year forecast, this assumes that you've invested directly into Bedrock $100,000 and there's no sale, that the investor doesn't redeem any of their capital. So year one with Bedrock, we were expecting a 4% cash on cash, and then 9%, 11%, 12%. So really we're seeing stable increases. What's really cool about Bedrock is we bought this thing at a ridiculously low cost basis. We paid $8,000 per pad. And in general, you can't even buy the land for that, let alone develop it. From our experience, we've had to develop pads several times, and it's usually $20,000 to $30,000 to build a mobile home lot that's ready for a home between the concrete, infrastructure, everything. So we bought it for ridiculously low. So even just small changes that we've been making to submetering, truing up the rents, it's increasing the cash on cash return. We do have some plans in here to bring in more homes, which of course is part of the budget that I just showed you, which will also continue to increase those returns. Then what happens is in year 5, I don't have this on here because this is again one property, but for all of our properties, we plan to optimize the equity by doing cash out refinances. And so that typically will happen year 4 or 5. There would be a capital event where we would receive any of the equity out. And then our expectation is rather than distributing that to investors, we will reinvest that same capital into a new property. And what's great about that is it's an anti-dilution event, meaning your same equity is worth more because it's now invested into 2 properties versus just Bedrock. And same thing with any sales, we would reinvest the proceeds into more projects. So we continue to double down the investment and get better and better cash on cash. Finally, with this particular project, we expected another $122,000 to come at the end of the year 10. So more than doubling your money in just the 10th year, plus all the monthly cash flow you get every year. So really great returns on Bedrock. I see a question about depreciation on the K1 investment. The answer is yes. So with real estate in general, and especially with mobile home parks, we can do what's called a cost segregation study where an engineering and accounting firm, they're usually a hybrid firm, comes in and they do a study of all the materials in the asset. And in particular with mobile home parks, it's a very high percentage of the materials in a mobile home park or an RV park that are depreciable the first year with bonus depreciation. For example, anything really other than the land is depreciable. So the concrete, the water infrastructure, sewer infrastructure, the what did you call it, Wes? The security shack, the guard shack, that's depreciable first year. All those kinds of things with bonus depreciation, we can depreciate them the first year. The other thing that's cool about a fund is that in general, you only get to do that the first year of ownership, which for us would have been 2022. But in our situation, every year we're buying new assets. So we're going to be able to do cost segregation studies every year on the new assets. So you'll continually get depreciation every year. Obviously, the first couple of years is going to be the biggest depreciation because we'll have the fewest investors to split that up over and the biggest assets at the beginning. But that's something that we expect to see every year. Any other questions? Okay, I'm going to come back up here to our contact slide here, just so again, everybody has that. We'll send out the recording in the next 24 hours, probably tomorrow morning. We'll send out the recording as well as this deck. Again, the funding timeline's rather quick. So if you're interested, please get back to us over the next few days so we can reserve a spot for you. And feel free to reach out with any questions. With that, we are done. But if anybody wants to stick around, we'll be on for a few more minutes for answering any other questions.